Trading in a Negative Year by www.profitabletradingtips.com. When the market is going up, it can be easy to trade. You just buy and then sell. But when trading in a negative year, is it all about selling short or buying put options? We may now be trading in a negative year or one that will become negative by year end. CNBC Market Insider remarks that stocks may be heading for a negative year. Stocks are expected to test the lows of the year in the near future and could be setting up for the first really negative year since 2008. Wall Street's consensus view remains that the market will close higher in 2015, expected to bounce after testing the year lows, but some strategists say the odds are growing that the market will end the year with losses. The S&P 500 last closed lower on the year in 2011 when it was basically flat, less than 1/10 of a point lower. The last time it was negative before that was when it declined by 38% in 2008. Goldman Sachs Tuesday became one of the first firms to officially forecast a negative year, cutting its year-end estimate for the S&P 500 to 2,000 from 2,100. It cited a slower pace of activity in China and the drop in oil prices, which has slammed earnings. The odds are strong that 2015 will end up being a negative year. How should you trade the last few months of 2015? Will companies get better or worse? Will the Chinese economy continue to cool off and drag emerging markets down with it? Will consumer confidence in the USA pick up and save the day for consumer stocks? Looking east for cues. U.S. News and World Report reports that Asian stocks are leading a global market sell-off. Asian stock markets tumbled Tuesday, extending a global market sell-off triggered by grim corporate news, expectations of a Fed rate hike, and jitters about the Chinese economy. Japan's benchmark Nikkei 225 dropped 3.4% to 17,037.07, and Australia's S&P ASX 200 lost 2.9% to 4,967.1. South Korean markets were closed for a Thanksgiving holiday. Hong Kong's Hang Seng slid 3.4% to 20,457.01. The Shanghai Composite in mainland China fell 1.7% to 3,038.17. Singapore and Indonesia fell while the Philippines was slightly higher. The world economy is so interconnected that when exports fall off in Japan, Taiwan, or mainland China, markets adjust, first in Europe and then in North America. China has far too many debts, much like the Japanese in the late 1980s. The same adjustment may happen with a prolonged period of deflation. The good news for the USA is that while Americans will be importing cheaper products from China, sales on goods to China will not fall off substantially because the USA does not sell all that much to China. We mentioned the possibility of a consumer-driven recovery in the USA. Is that possible? Consumer confidence. MarketWatch considers the U.S. consumer confidence in viewing the stock market. Stocks traded slightly higher Tuesday in volatile trade, underpinned by a stronger than expected reading on consumer confidence as investors look for clues to the health of the U.S. economy. The S&P 500 SPX plus 0.17% rose 9 points, or 0.5%, to 1890, trading within a 23-point range. The Dow Jones Industrial Average, DJIA, plus 0.0%, advanced 51 points, or less than 0.3%, to 16,054, briefly dipping negative at one point while trading within a 177-point range. The Nasdaq Composite Index, COMP, plus 0.08%, rose 26 points, or 0.6%, to 4570, trading within a 78-point range. The indexes bounced between small gains and losses ahead of a September rise in a consumer confidence gauge, which came in higher than the previous month and beat expectations for a decline. When trading a negative year, you can still search for winners. Consumer stocks may be the bright light as the market sinks by year end. For more insights and useful information about trading stocks, options, commodities, or Forex, visit www.profitabletradingtips.com.